Gary, moving to thing number 4, talking Macau, LVS, Las Vegas Sands, DKI portfolio position. Gary, thing number 4, Macau gross gaming estimates aren't wrong, just misleading. Tell us what we need to know.
So last week, Rob, a sell-side analyst upgraded his estimates for Macau gross gaming revenue and his price target for Las Vegas Sands. Now, I'm going to be honest, I've always loved poking at the sell side. I think, it's not such an honest business model. They're not really direct about it's marketing, trying to sell investment banking services. If you're reading sell-side research, you're not the customer, you're the product. That said, this is not a situation where I want to poke at the analyst. I actually think this particular analyst did good work, and I agree with their work. And so, we're not poking at them today. But we should talk about what it means, what kind of estimates they put out. So Macau is the gaming capital of the world, is a territory of China. And it is much, much larger than Las Vegas and Singapore and the Philippines and other places where gaming is big and legal. And so gross gaming revenue is basically just a measure of how much money is wagered at the gaming tables. And so what this analyst said was they expect a full recovery of Macau's GGR, their gross gaming revenue, to pre-pandemic levels by 2026. Well, hey, that's next year. That sounds pretty good, right? Okay. That estimate might be correct, but it's misleading. And again, I'm not picking on the analyst. I agree with his analysis here. But the reason that gross gaming revenue is down right now is because the big spending VIPs haven't fully returned to the casino gaming tables in Macau. And because they are such big spenders, such big gamblers, that has held GGR levels well below the 2019 mark. Now, that's a big problem for companies like Wynn that focuses on the high-end consumer. But that's not the case for Las Vegas Sands. Sands does most of its business in the mass and premium mass markets. And the reason that matters is because those markets are much higher margin. Based on calculations we've done, $1 gambled at the tables by a VIP is worth about 1/10 of $1 gambled at the tables by somebody in the mass and premium mass market. So in those areas, Macau has already seen a full recovery. The mass and premium mass markets in Macau have recovered to pre-pandemic highs, and Las Vegas Sands already has several properties, both in Singapore and in Macau, that are performing at all-time highs. Now, somebody might say, wait a minute, there are a couple of those properties that still aren't doing great. That's true, but the reason for that is some of those properties have hundreds and hundreds of rooms out of service right now for renovations. Now, casinos, hotels, they need to be at a very high end. They need to be, beautiful and well-maintained. And the nature of these places are they take a lot of hard use. And so it's normal to take these rooms out of service to renovate them. Well, that's where Las Vegas Sands is right now. And guess what happens this quarter? This quarter, they complete those renovations. So we expect to see the vast majority of Sands properties performing at all-time highs later this year. So I don't think the analyst here was wrong. I just think they gave aggregate data where you need to drill through that and look at the difference between the mass market, the premium mass market, and the VIP market. Again, that's a problem for Wynn, but not for Las Vegas Sands.
Gary, into 25, you mentioned in the takeaway that there's still risk. What are you going to be keeping a close eye in 25 as it relates to LVS?
Yeah, so I think the biggest risk right now in Las Vegas Sands is the Chinese economy. They are actually facing deflation right now. Now, in general, I do not have the same distaste for inflation that most economists do. A lot of economists think deflation is horrible and it's terrible and it's a disaster. But, if you're watching this, let me ask you, would you think it was horrible if the price of your groceries or the price of your car or the price of your clothing went down? Could we manage with that? Of course we could. We'd be fine, right? So I disagree with a lot of economists on that. But the issue here is the reason the Chinese economy is facing deflation is because their property market has imploded. Now, China has spent years and years and years building up fake GDP numbers. Now, before anybody jumps on me on this, yeah, I know we have talked for months and for years about how US GDP numbers are faked. I'm not saying China is the only one that screws with these numbers. Ours are dishonest too. So I'm not picking on China and ignoring the United States. However, what China has done to goose their GDP is they've built large numbers of basically ghost towns. They built lots and lots of property without people to occupy it. And the Chinese people were storing their wealth in partially built or to be built real estate. And a lot of those companies have gone bankrupt. Their banks are over leveraged. They have had a property bust that, the numbers I'm seeing are actually worse than the 2008 financial crisis in the US. Now, just a reminder for people who are maybe a little bit younger and don't remember, in 2008, the financial world didn't fall apart. It was the property market, and that pulled down the equity markets. But the amount of money lost in the US equity markets in 2008 has been exceeded by the losses in China. And, in 2008, in the United States, most of that money was held by large financial firms. But in China, the average citizen has a ton of exposure to the property market. So all of this means that if the Chinese economy gets worse, people will have less money to go to Macau and gamble. And if that's the thing we're going to be watching, if that happens, that won't be good for Las Vegas Sands. So I'm not worried about the overall gross gaming revenue numbers. Right now, the mass and premium mass markets are very strong. Sands properties, once you back out the renovations, are doing extremely well. But we're going to be watching closely the situation with the Chinese economy and the property market there, because that could create a problem for our thesis. And listen, if we need to sell the stock, we'll be selling it at a profit. And, instead of recognizing big gains, we'll recognize smaller gains and just look for a better entry point in the future. I don't think we're there yet, but we'll be watching it. And, one of the great things about being an investor is the ability to say, I no longer agree with my own thesis. I'm going to sell the position and go find something else.
Yeah, perfect segue into joining the DKI Premium subscription. You'll get access to all of our current recommendations, open position that Gary has in his portfolio. Most importantly, though, understanding when to close out or when Gary's closing out those positions for your consideration. Premium subscription on our website, either a monthly or yearly options. You can always sign up for our free subscription as well. But that will not get you access to paywalled content that you really want to see.